If you follow the crypto markets, you'll know all about market cycles. And by most standards, 2021 was a great bull market year. Fast forward to 2025, it's been record-breaking. But if we look closely, there are some key differences between today and the last bull market. And the reasons why might surprise you. Keep watching to find out why this bull market could be different to last. Welcome back to the Binance Studios. My name is Jessica, and if you are new to the channel, make sure to subscribe so you don't miss more crypto videos like this. Now, back to the topic at hand. When it comes to market cycles within crypto, it's worth looking at market catalysts and drivers. In 2025, the drivers have been very different to previous years. Back in 2021, the headlines were dominated by hype, from record-breaking NFT sales to celebrity endorsements in the metaverse. Momentum was high. In 2025, however, the headlines are being written by institutions, from Bitcoin ETFs to stablecoin rails, to public companies stacking up on crypto on their balance sheets. This is a market that looks and feels different. Remember Michael Saylor's Bitcoin buying at the peak of 2021? Michael Saylor and Strategy held 120,000 BTC, and that felt massive at the time. Fast forward to today, MicroStrategy holds more than 226,000 Bitcoin, and they're far from alone. In 2021, corporate adoption was rare, but by 2025, over 140 publicly listed companies now hold Bitcoin on their balance sheet, more than double of last year. And the expansion hasn't stopped at corporations. Governments are joining in. Bhutan, the US, and countries across Asia have quietly begun building strategic crypto reserves, treating Bitcoin, BNB, and even stablecoins as part of their financial toolkit. Meanwhile, governments are experimenting with on-chain data, and stablecoins are powering day-to-day payments. In short, 2021 was retail hype, but 2025 is where institutional integration happens. And nowhere is that clearer now than in how the market is performing. This cycle also is not just a one-coin story. Bitcoin does remain the anchor, but capital is flowing into assets and projects with clear utility. For example, Ethereum has surged on record ETF inflows and corporate treasury demand. Chainlink has made headlines when the US government used its Oracle to publish GDP data on-chain. Solana continues to climb, boosted by major upgrades like Alpenglow. So there you have it, the key difference. Unlike earlier cycles, momentum isn't concentrated in just one asset. This growth, this time, is broader, spanning infrastructure, real-world adoption, and institutional-grade narratives. And this broadening effect that we're seeing is perhaps the most obvious in DeFi. DeFi isn't just bouncing back. It seems to be maturing. Ethereum does still anchor nearly 60% of its total value locked, but Solana and other chains are carving out market share. Stablecoin legislation is in place in numerous key jurisdictions, fueling on-chain payments, and new models like Athena's USDE are testing some fresh stablecoin structures. And as institutional capital pours into tokenized treasuries and on-chain lending, DeFi is shifting from a high-risk experiment to a regulated, yield-bearing layer of global finance. Which brings us to the bigger picture, why this cycle doesn't just look different, it feels different. If we take a step back, there are three narratives that really clearly define this bull run. Number one, Bitcoin as digital capital. To understand Bitcoin's evolution, consider this. In 2011, an iPhone 4S cost 162 BTC. Today, the iPhone 17 costs less than 0.01 BTC. That's not just price appreciation, it's showing that it pays to hold Bitcoin over the long term. Bitcoin is now recognized by regulators, corporations, and institutions as digital capital. Like gold, but in many ways could be considered stronger. Number two, stablecoins as financial rails. Stablecoin supply has surged to $161 billion. Across Latin America and Africa, they're already being used for daily payments, savings, and remittances. This is adoption at scale, with stablecoins fast becoming the foundation of the digital economy. And number three, institutional demand. Reshaping markets, the spot Bitcoin ETFs have seen $13.7 billion in inflows this year, while gold ETFs lost $18 billion. The message is clear. Institutions are reallocating capital and treating Bitcoin as a macro hedge alongside equities, bonds, and gold. And it doesn't stop with Bitcoin. Corporate treasuries are holding millions of ETH, while public companies are doubling down on crypto adoption. So what sets this bull run apart? Well, the last cycle, Frenzy, was all retail speculation, but this one seems to be built on institutional conviction. With governments, corporations, and capital embracing crypto, the 2025 bull market is not just another chapter in the story. It could be the beginning of a whole new era. It certainly sounds exciting, but I want to ask you all watching, what do you think? Let us know in the comments below.